the advisors are going to need to retire,
Sure.
and that's another hopefully big wave that'll be happening, is that the older advisors will be able to retire and let some of the newer advisors come in and take their place, because you've got to continue to stay present and be forward looking when you're investing. That's really important. You can't just stay on the past or history. The S&P is not what it was even 5 years ago. There's different companies in it. So you can't just keep saying, well, history says this, history says that. You really need to be present and moving forward when you're investing.
Absolutely. And so I'm curious, since you mentioned it, why do you think some advisors are reticent to make the change in adopting ESGs? Is it purely because of historical performance, or are there any other variables at play?
Yeah, I don't think it's just performance, that doesn't stack up. I think, it has to do with anything. Human beings don't like to change,
Yeah.
and investor, well, if we look at, investment advisors like myself, if we are self-employed, then we have to learn something new, and we, have to really understand it, educate ourselves, and then implement it in the portfolio. So why do I want to do that if what I'm doing is working?
Mhm.
Right. So I think some of that is just, the way things happen with human beings. We don't like to change.
Right.
But we're seeing that a lot of things in the financial services industry are changing. Millennials are coming in and creating a really nice place where they're saying, I'm going to work as a financial advisor and I'm only going to give advice. I'm not even going to invest. I'm going to help you understand how to do this in more of a passive way, and you go ahead and do it on your own. You can get ESG ETFs, you could get ESG indexes. They're few and far between, but I think as we see, the interest grow, we'll see that part of the investment world continue to get larger.
Sure, makes sense.
Do you think that that the growth in and the demand for companies that fit into the ESG model is is putting any sort of pressure on companies as well to make sure that they are, I don't know if there's a specific standard, but that they're following at least a loose set of standards that allow them to continue to be a part of these, right? As management of a company, they also want to make sure that their company is desirable for their shareholders, right? So
True.
is that happening? Do we see companies saying, oh, yep, we need to make this change?
Yeah, it is happening. Because what
Wow.
happens is you'll see a lot of the larger corporations, and there have been many fund companies that have been working with the ESG models or sustainability investments for years. They're not new in the business. In fact, what you see in the nonprofit world, the large institutional funds have had ESG in those funds for years and years. So that is not new. What we're seeing is it's more in a private sector that we're saying, is this something that's new and should I use it?
Mhm.
But in those areas, we've seen it be involved in or put in the portfolio for a long period of time. So now what's happening is the larger funds are able to go to the shareholder meetings, work with the proxies, help with impact, and say, we have scientists, or we have, people on our staff that say, if you would just do this, you would maybe make a better profit because of the sustainability.
Mhm.
And so we have seen that, and we have reports. I get them from the mutual fund companies and the investment companies that I use, and they produce them for the general public that says, we went to X company and asked them to do this. They actually took our advice and implemented it. And now, the profitability is higher. So yeah, we're definitely seeing that.
Great to
And now we're
see.
starting to push governance too. We want women on all the boards. So, I mean, that you, if you look at those numbers, when you have a board that is representative of more than just white males, guess what? That collaborative conversation and that consciousness is a lot higher than if everybody is thinking or understanding the same thing. So that's another thing that we do, is we see that, even with the board, makeup, we're wanting to see diversity, and we're requiring it. We're saying, if you don't, then we will take all of our shareholders and we'll move to a different company.
My mind is being blown. You can invest according to your values. Women can be on boards of companies.
Right.
I
Everything's new.
know. It's like
Everything's
we're
new.
winning. I know.
Yeah.
I'm like, woohoo.
Well, and it does it folks, I know that there are some folks in the LGBT community that struggle with investing, because they morally don't necessarily think it's right, or they think that their money can be better used in other places. But I'm curious, and I'm thinking that this is part of the reason why companies like MassMutual signed on with the amicus brief. Companies like Amazon and PayPal and Salesforce said, we're going to leave North Carolina if these bathroom bills continue to go through. These companies,
Right.
it's not just, they're not just thinking about their employees. They're thinking about the impact that they can have. Companies can have and continue to have an overweighted impact on what is going on politically for LGBT folks in this
Oh, yeah.
country.
Goes both
And
ways.
investing in those kinds of companies, those companies that are proving themselves to do that, are doing that, gives them more of a reason to continue to do that. If we all just flee from these companies, then there may not be as much of a reason for them to continue to do that.
That's why we need to get Disney in Colorado.
Yeah.
Yeah,
Someday.
I know. What good example is Disney is just, number one on HRC's list for a reason. I don't know if they're exactly number one, but they are on that list
They're
and
up there,
have
yeah.
been repeatedly. That list has been out for 20 years trying to help us understand what companies in this United States or globally are able to really work with us as a group. And we are seeing there's a good track record with many of the corporations. So
Yeah.
I think that's important to note. If you look at where do you want to invest, we always hear this, diversify, and I agree with that. And some folks are wanting to invest in something that is tangible, like real estate, and that's important too. I think that's a great way to invest. The problem comes in is when you have everything in one place.
Mhm.
And as you continue to accumulate more wealth, sometimes you need help with it because you just don't understand all the nuances. So what I see is a lot of investors start in one place, and then over time, as they accumulate more and more wealth, they decide to, get help from, an advisor, or maybe they're part of an investment club, or, different ways to do it. But I really think that investing in the market is one of the things in our world. It's the number one investment. Uh, the US stock market is the number one market in the world. So if you're going to invest in something for long term, then it's a good place to put your money. If it's not going to be long term, and I'm saying, 10 years or more, I'm not saying, day trading, that's extremely risky. But if you're able to put a portion of money in that so that it's long term, and you want to retire in 30 years, I think that's a good place to put some of your money.
Absolutely. So I'm curious, we've talked about a lot of things here so far. What I'm curious about though is, all these companies that are qualifying to be ESGs, environmentally responsible, socially responsible, governmentally responsible companies. Is there any risk, or is there any filtering to make sure that they aren't included if they're like companies are actually wish cycling or turning a blind eye to worker rights, or are really just rainbow capitalists at heart, and taking advantage of the community as opposed to actually serving and helping the community? Is that being filtered out of these funds as well?
It's being watched, more and more software is being developed to be able to really pick apart and pick through some of these things. We're finding that transparency very important to people, investors, investment advisors, but even in corporations, you're seeing that we're wanting to find a way to really understand what this company is all about. So, if you just looked at, again, if you looked at ARC's list, I mean, they're looking at policies, they're looking at practices, they're looking at legal issues that they've had with employees. They're looking at what do they own? What does the company own, and what's their balance sheet, and where is it? And so they're looking at so many different factors. And then we use some software that actually can drill down and give us some, minute information information that's public, a lot of public information I'm talking about here, but it also can categorize it in a format that if I want to make sure that I'm not going to invest in, weapons, then it will give me those companies that have nothing to do with that industry at all. So we're seeing that software developers are coming to the table in the financial services industry. A lot of them coming from, places like MIT and other think tanks where they've been discussing this for years and then, put it into place. So I think that right there is really exciting news, that
Absolutely.
we're, the academics are also creating the tools and resources we need to help identify areas that might be, more of a risk, but also might be someone that we want to invest in because of who they are as a company overall.
Absolutely.
So it's kind of interesting. What you're saying here is that there's a lot of different layers to this, and I think that a lot of queer folks, especially when we jump on the rainbow capitalism bandwagon, are quick to judge companies because they see them being out there at Pride, right? But what you're saying is that there are lots of other layers and other things that they may be doing that actually show that they're not truly what we deem as the evil rainbow capitalists. They are actually doing a lot of good when it comes to the environment, to socially responsible, to governance, that there's a lot of other things. And maybe we should be looking at these companies as the ones that are the standouts. These are the ones that are getting the A. I know that HRC gives them a number rating, but we kind of were wondering who are the A pluses, right? Who are the ones that are going above and beyond? Well, maybe it's some of these companies that are being included in these ESGs.
Yes, very much so. And I think one of the things we do again as human beings is we keep looking in the past, or we stay back there. And there was a time we didn't have a lot of support, And
Right.
so when you think about Pride coming up and why we needed to have a celebration and some of the legal rights that we have fought and won, it makes sense why our community is gun shy. It makes sense why our community is saying, I don't want a part of that. They don't support me. But there's been a lot of changes, especially in corporate America. A lot of policies now are very welcoming to transsexual people, transgender people, trying to make sure that they're inclusive in their language as well as in their health benefits. So, I'm seeing a turn for the good when it comes to that sort of thing.
Nice.
So I think we really, again, need to stay forward looking. And if you are a shareholder and you have enough shares, you can make a difference. So if we are all coming together and saying, some companies that we know support us very well are going to get my money as well, and others will not, then we do it with investing as well as retail shopping.
Right.
You see, we band together and might have a protest or a boycott, which is great, but we also then need to put our money there where our mouth is and say, okay, if I'm not going to shop there, where do I find a place that I can shop that really supports me as a person?
Right.
Absolutely. So this makes me wonder then, do all ESGs fit all people? Meaning, is every ESG going to align with my values, or do I need to do a little bit of more homework before I actually pick an ESG? And if so, where do I do that homework?
Yeah, well, there's a couple of different places. I went ahead and got some information, before we sat down, because I thought, where can I help you understand to, get some of this information? MSCI index is one of the indexes we look at in the business, and that's Morgan Stanley Capital Investments. And they have done some research for you. They've got studies, they've got white papers, things like that you can look at. You'll see companies, because it's pretty subjective how we decide to build our models, right? So you'll see a company that might say gender. I want something that's going to be, gender focused. Well, in a gender focused fund, they may include energy funds that are in the top list of HRC, but they're not quite that the carbon footprint's probably higher than most
Mhm.
in the sector, and that sector in and of itself has got a high carbon footprint. So you say, well, I don't want that either. And that's where you kind of start saying, here's my priorities and this is what I want to do for myself, and this is how I'm going to go forward. Or you just say, ESG as a general screening will cut out most of the bad guys, or at least limit the laggers, or the ones who don't seem to understand how much risk they're in by not putting in some of these important aspects. And so I just want to start there to make me feel like I'm doing something.
Mhm.
And that's okay. I don't think we should have so much judgment. We have so much judgment and shame around things, especially when it comes to do with money. And it's like, what if we just do what feels good to us and go from there? And really in the long run, as long as you're in the market and you're participating, there should be some growth.
Mhm.
But even in the bond market, we're seeing a lot of things now starting to really fit under that ESG umbrella in the bond market too.
Oh,
So you don't
really?
necessarily always have to buy the stocks and risk if that doesn't feel right to you. You could look at the bonds and look at the bond market, and maybe that just feels better.
Mhm.
Right.
Oh,
Yeah, I
never thought
think
of that.
that HRC also has a municipal index
Yes.
of
Hmm.
cities and states that are doing well when it comes to the rights for their employee. I think it's more specifically for the employees of the state or the city.
Hmm.
But it does give at least one more layer or one more condition to put on those investments to see whether or not they're doing
Yeah.
well by their workers.